Good morning, everybody. Good morning, good morning, good morning. It's great to see everybody. We've got a market. We have got a market. It was a little bit sleepy. It was a little bit paint dryish. And you know what? I don't like this camera. I'm going to go with head on. You're going to get just a screen full of Hans, maybe. Sorry, I'm a little under the weather. So bear with me here. So we've got, of course, we've got some more shouting about EU tariffs going to 50%, which would be terrible for Europe. We're probably going to put them into recession. So I think it's probably an example of, Trump never follows through on any of these really, really big kind of threats. And so I think again, we're going to kind of realize that that's the case. 25% tariff on Apple phones not made in the US. We'll see how that comes through. So, first of all, a little bit about Hans. Let's talk a little bit about, let's see here. I am Hans Albrecht. I am the Director of Income at Option Pit, and I'm happy to see you all here. I have a very, very, very deep, a deep history in options market making, 15 years of options market making, and then another 10 years after that, basically running a whole bunch of these income funds, right? So income funds, ETFs that use equities, that use commodities, things like that to basically kind of generate that overlay, right? Selling calls, selling various kinds of options to create that income overlay. So really, really great background. And I'm here to regale you with stories of the trading floor. No, I'm just kidding. We're going to get right down to business here. But happy to have you all here. Income is just one of the most important things. When the market is doing a lot of the work for you, you can kind of do different kinds of stuff, which we do in Turbo Income as well. We sort of jump on when that MTI indicator is starting to get nice and green and the markets are looking good and the VIX is giving us good signals and good vibes. Then we're going to jump in and really take advantage of that, right? Because I am greedy. So I don't just want income trades all the time. I want different kinds of income trades, different from the sort of traditional ones that you're going to see out there. So, okay, so back to the market. I think I saw this the other day. It was called the taco trade. Trump always chickens out. So is this another sort of taco trade, buy the dip? Trump's going to chicken out and the bark is louder than the bite kind of thing. I truly think that, we saw a whole bunch of flinches over the last month, and I don't think he wants to send the world into the sort of growth tailspin that could have happened before we came in with the bond put and all that other nice stuff that he started to say. He said, well, hold on a sec. I didn't want, I want people to be rich. I was just trying to make a point here. And so here we are. He's going to sort of keep up the rhetoric a little bit because that's how he negotiates. And now, having said that, we'll look at some charts in a second. Debt is definitely the elephant in the room, right? This new budget is going to be out of control. How much has he really saved with Doge? So again, you're seeing yields start to kind of vote for what's really going on, which is we're seeing higher yields. I think 4.5% on the 10-year is kind of that level, right? Up above that, and especially if we start to move towards 4.8, 4.9, I think that could be a bit of a problem. Remember, yields compete, stocks compete with yields. So yields, number one, are going to compete with stocks and say, listen, you can make money over here without taking too much risk. But number two, and I think more importantly, yields are kind of that elephant in the room that sort of is suggesting that maybe things aren't well below the surface, in a way that could, suggest problems with plumbing. And certainly we're seeing the sort of financial plumbing, and we're seeing that people are voting with their feet. So look at foreign flows into domestic, into U.S. Treasuries, I mean, they've been out, right? So people, there's no question about it. This, U.S. exceptionalism frayed kind of narrative has had some legs, right? So people are leaving. Now, having said that, they went all in on U.S. Equities and assets over the last many, many years. So is it just a kind of a sort of normalization where people are like, well, maybe we should have a little more money in Europe, not if there's going to be 50% tariffs, or maybe we should have a little bit more money in other places, given the administration not wanting to play nice with everybody, and globalization is kind of a little bit under threat. So maybe it's just a little bit of normalization. My feeling is that it's a mistake to count out the US. It's a mistake to count out its consumer, its exceptionalism in innovation and many other areas. And I think it's a mistake to bet against the US. So I think there could be that money could eventually perhaps start to come back in again. So let's jump to the charts here, take a quick look at some of the things we're seeing. So we've got the S&P, no question. I mean, look, the markets, it is what it is, right? We're getting some weakness here. We're coming down towards the 200-day moving average. We do have a relatively positive picture. We've got some of these moving averages moving up. I like seeing that 50-day starting to curl up again as well. So look, we've had a nice run. And as I often talk about, you look at that 9 EMA for support when things start to look good. And back when we were in here, I said, listen, this is a bit of a new picture compared to this. We're above the 9. We're starting to curl up. We're getting that breakout above this major trend line. And a lot of people were out of the market. So there was a lot of systematic buying, people getting back in, retail certainly pushing back in. I think retail has kind of been right, whereas the so-called smart money is a little bit more on the sidelines right now. But look, we've kind of kept bouncing off that 9 EMA, and now we're kind of reconsidering, right? The market's very, very expensive up here. It's true. It's expensive. But if you think that eventually rates are going to come down, I think they do. It won't be as bad at some point. And, with the tailwind of AI and all this other stuff, I think this would be interesting. So you've got the QQQ, same sort of thing, pulling back here, 505, below that 9 EMA. So I think you want to respect the chart. You want to take a look and you want a little bit of a bounce back. I want to see that kind of get back up into that 510 to 515 range. If it doesn't, then maybe we could kind of cycle back down to this level here, which was sort of the more recent larger breakout around in the 490s, right? Same kind of thing for the S&P. We sort of had this spot here that was a little bit of a breakout. So I think on the SPY, you kind of want to watch that 570 level. We really kind of want to hold that 570 level. And of course, we want to watch other things. Here's the IWM. I was saying last week that this there was massive short covering at IWM. People were just all in on puts and shorting the heck out of it. And so this was sort of part of a major, major short squeeze. But with higher rates for longer, it's a little bit tricky. Okay, we're going to get to the MTI in a second, guys. Let's take a couple looks here. So here's your chart again, right? So the 10-year yield, if it's above 4.5, I think it's a problem. Here we are back down around 4.5. So it's a little bit uncertain at this point, but I think if you can keep it under wraps a little bit, you'll be okay. Here's your TLT, still not looking that great, right? So that's the interesting thing. You've sort of seen like the US dollar never really had that massive rally back, even though stocks really came back. We can see this is more evidence that there is some fraying in terms of the US dollar strength and US exceptionalism. So there's some work to do, right? Stocks have kind of ignored some of that to some extent, and the bond markets are saying, well, we're not done. We're not done, right? So let's talk about the way that we do things at Turbo Income, and I think this is good. I think you need a process, right? A process is very, very important. And having rules and guardrails is very, very important to, people don't talk about this a lot. They talk about monetary capital. And of course, that's important, right? The dollars and cents, the bottom line are exceptionally important. But how do you get to that? You get to that with rules and guardrails and ways to keep yourself in the right lane and away from some of the noise and distractions and all that. There's probably no better place to be distracted than stock markets, right? With all the media news and the 300 newsletters that you get in your inbox every day, right? So process is important, and that's what we're all about at Turbo Income. So we really have these important scans that we look at depending on the kind of environment. Very, very key to look at things. And I won't bore you too much with stuff like this, but some of the things we look for, free cash flow, right? It all just starts from quality. When you're doing income trading, you really want stability. You're trying to create that reliable, consistent income, and it starts with great companies. For the bulk of the portfolio, right? Doesn't mean you can't kind of deviate and have a little bit of fun with some of the portfolio. And we certainly do that. We've had some nice wins as well. And so cash flow for companies with high free cash flow outperform the rest of the market by 18% a year. Mic drop, right? So quality companies, and especially if we're going into a little bit more difficult times, those companies are going to weather the storm a little bit better. And I want to give you an example of how good picking. So this is our portfolio, which you get in Turbo Income. You get the long-term portfolio. And this is, since we started months ago, this has not changed. These names have not changed. And this, if you just look at the names that we have in here, they're up 12%, 12.1% since the service started, since the program started. With the SPY up 3, this is from yesterday, by the way. This doesn't include what's going on today. With the SPY up 3.6% and the Qs up 5.5%. So is picking good names, is filtering and scanning for quality important? Yeah, you're darn tootin' it is, to the tune of significant outperformance. We have names that are hitting all-time highs every day, right? So we've got one that's down a little bit. We've got another one that's down a little bit here. But overall, here's another one. But overall, this is what you want to see. You can't get everything right all the time. But when your winners far outperform 50%, this stock's up 50%, 29%, 12%, 18%, 48%. These are important things to consider. So quality, stability, and then I'm going to show you the filtration process, the income to risk balance. This is going to give you better choices. And that's how we get down to that one single name that we are going to do an income trade on every week. Now, am I looking around? Absolutely. We've got some cash machine trades. We've made 5.5% on Hood. We made in basically like 4 weeks. Those are very, very conservative trades, but we have others that have made 30, 50, 100%. We have a Tesla Turbo. Remember I told you when the greens line up, when things are looking really, really good, we had a Tesla unofficial turbo trade that made 102% or something like that, just very, very quickly. So let's talk about these different scans. And then we get into the MTI. So the MTI is kind of your secret weapon that you can only get with Turbo Income. So it is going to keep you out of trouble. When did the MTI go super, super green? All the way up through here, right? So playing the bull market up all the way up to over 600. And when did it turn yellow and red? Right here, 597, right? So it gets you out of Dodge when it's important. Now, does that mean get rid of stocks? Does that mean hedge aggressively? Does it mean switch your income outlook? It means all of those things potentially for you, depending on the kind of trader you are. But again, rules and guardrails that get you out of trouble, keep you out of trouble. This look at this blood red. Keep me out of trouble as these underlying problems and fear levels are rising in markets. That is a very, very key component of the Turbo Income strategy. And so we show you how to use that, and you can use it on any stock. You can go use it on whatever you want outside of Turbo Income. So it's absolutely fantastic. So the filtration process, 3-step process, scanning for the various kinds, right? So it depends what kind of market we're in and what is kind of taking the baton is how we kind of get into and scan for these trades at the very top level. So I'm going to show you an example. So we do that fundamental screen. So look at this. It gives you all these names that are fantastic from a fundamental basis. Number one. Number two, it gives you the result of those when you filter for technical strength, right? Great, great quality companies. I can think of a whole bunch over the last few years that I love on a fundamental basis, but just wouldn't act well. And we want as many tailwinds as possible, right? I'm not arguing with the market. I want to jump on board and follow the market when it gives me the okay that my thesis, that my idea is now going in the right direction. So quality plus technical strength. Then we filter down to volatility stability, right? We want names that aren't crazy, 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 and but also on the other end of the spectrum, aren't, we don't want the ones that give us very, very little sort of juice, right? There's a sort of happy sort of sweet spot where we want to kick that football through the uprights. We don't want to kick it too close to the upright. Does a football kicker ever go, I'm going to try to get really, really close to the upright? No, he is going right down the middle if he can. That's the easy money for him. So we want to do that as well. And then we want to look at the names that are going to, again, filter for our final step of the process, which is going to be our volatility, our risk to volatility, okay? Our risk to volatility is what we're going to get down to. So here's one of the scans here. Here's some of the scans here. And then we come down into here. So then we have these final sort of winners, right? So we have a whole bunch of really, really cool companies. Some of them I'm going to kick out. I don't want to be a part of biomedical. I'm going to look into some of these names from a story standpoint, right? Netflix, fantastic story, typically does quite well. One of those names that I've loved since, $500. 225 actually. I was on TD Ameritrade show talking about it at 225. Now it's 1200. And so I think it continues to have a really, really good story. It scanned very well, but it didn't win. So we look at other ones, AppLovin coming back. So this is, these are not going to be boring names necessarily. Visa, one of my favorite stocks, always, 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 always. Sadly, it did not scan well. Why? Well, maybe we're not getting, maybe the option pricing isn't quite where it needs to be, right? That's what the scanning process is. Don't get stuck in the same names. Look for the ones that are giving you that piece of edge as you go along in this filtration process. Costco, one of my very, very favorites. Where did Costco scan? Scanned really well, really well. We had a nice win in Costco. I think it was 12.5%. Already in turbo income. We have Monster Beverage. That's interesting, right? That people have been buying these energy drinks, and that's kind of interesting. They're not that cheap, but anyway, that chart has gone gangbusters. So I'd be a little bit wary of that one. So I'm glad that one didn't win in a way, because it's consumer discretionary. It's had a really, really good run, and we're starting to see some cracks in the consumer. Right? We are actually starting to see that. Who came out this morning? It was Deckers, wasn't it? I think, did they make the Uggs? I can't remember. But we are starting to see some cracks out there. So consumer discretionary, I don't mind if it's kind of retail-y discounty, like a Costco or something like that. No one's getting rid of their Costco membership. I don't mind something like that. And interestingly, TJX is in there, right? So this is retail, but it's retail discount, just like Costco. See, retail discount. So what does TJX do? Well, they take everybody else's problems and make money from it. You have too much inventory and shirts and jeans and whatever, socks, perfume. We'll take that off your hands and we'll sell it at a discount. And that works pretty well in a consumer struggling, challenged in type of environment. So we have a winner in this list because we get in our final stage is that vol yield, right? That vol yield is taking all of this information and it's comparing what are you getting versus the underlying risk in the name, the volatility level, all these metrics that it looks through to give you that very, very best return for that income trade, given the outlook, given the technicals, given the fundamentals, given the option pricing, given all that, right? We're option traders. We got to pay attention to option pricing. I suspect some of these weren't in there. We can see some really low, maybe Visa suffered from very low implied volatility. What do we have? We've gone from crazy high levels of option pricing, a VIX of 50, to recently a VIX of 18. Now we're a little bit higher on this dip. So eventually prices get a little bit low. And it's quite possible that helped to exclude a great company like Visa. But that's fine. I'm agnostic to the name. I mean, I'd like to look through and go, well, this looks interesting for these reasons. But I'll tell you that the winner today, which I'm going to give everybody on Monday, when you join Turbo Income, you're going to get that. You're going to get the full portfolio. You're going to get the full masterclass. We did a whole bunch of masterclass sessions to talk about it, how we do things. My Edge series, we call it the Edge series, and it really dives into where the edge is in options. I think that alone might be one of the best things I've ever done, because it goes against the textbook. The textbook tells you XYZ, and reality tells you maybe it's just X and Y. Z is actually wrong, right? So that's one of the coolest things. You get that. And then the result is we just have people who are really, really loving it, right? So lots of good trades. I think we're 8 for 8 now, something like that. Really nice. When I last did this, average profit on capital use, 35%, average days held 9. I need to spend, this member says I need to spend more time on MTI. It really helps. Turbo, outstanding service. I made 80% in a few hours. Turbo trades have been awesome. Everyone loves the turbo trades because you can really, really, kind of grab more of that upside. So these are the kinds of things we're looking at. So right now, I think there's some interesting plays out there. I think the market is probably going to just struggle a little bit here, but I'm not getting super bearish. In fact, if we get down into the kind of sort of 570, just below 570 on the SPY, I'm going to probably start getting a little bit more bullish. The absolute low, I think, could be around that 5,500 level in the S&P, maybe 5,550, which would be kind of a SPY 550 sort of thing. And then I want to start getting a little bit more constructive. I want to start looking for those names that have been giving me a good indication, right? Something like a Hood that's starting after months of struggling. The MTI is starting to give me some nice greens, some nice yellows. The yellows are really the greens. If you get enough of that, and that also coincides with some technical positives, that's where you can really start to look at those turbo trades. And that's a whole other side of Turbo Income, which very much uses that turbo part of the name and turns the average better than average. I mean, if you think 20%, 25, 30% of trade is average, but it takes that and it goes, you know what, that's not enough. I want to really go for it. And I told you about the Tesla. And there are a number that we've had we've had on the track record before the service started that have done terrific. So the turbo is really where you really take that traditional income portion and you parlay that into something extra special when we want to get a little bit more greedy, which is totally fine. Gordon Gekko was right. Greed is good, but measured, right? This is about reliable, consistent income and really picking your spots. I think that's one of the things that people don't do as well. They get caught in that noise and they feel compelled to get into things too early, or they miss it and they chase and it's a little bit too late. You need those rules, those guardrails to keep you in the zone. in the zone. So let me see. Are there any? Let me see. Are there any questions out there? Let me take a look. Found the low latency, says Chuck Hall. Okay, good. Oh, big conversation about low latency. Hans chose the size of pick and pick. Am I tell that to Deck? Was it Deckers? It was Deckers, I think. Art of the deal. That's right. We've got the art of the deal. Greed is good. Jose says, absolutely. I think greed is good, but you want to be really measured, right? So when you look at that portfolio, the thing that people sometimes don't do as well is the age-old line that we all know and love, which is don't let your winners run and you hold on to your losers. If everyone could do that better, you would just completely change your world. And so half the battle, though, is making sure that you get into the right situations, because half the battle in income trading is avoiding stepping into those piles of you know what. Right? So sometimes it takes a little patience. When I started Turbo Income, we didn't do a trade for a few weeks. Then we hit like 6 in a row. I'd rather do that than feel compelled to suddenly just start throwing darts all over the place, right? So very, very important to understand the markets, and we talk about that every week. Every Monday at 1, we talk about what's going on in markets. What are the risk gauges telling us? Are they telling us to kind of sit on our hands for a moment? That's okay. Sitting on your hands is a position. It's a very important position. Remember all the things that kind of cycle into your emotional capital framework. Those are all very, very important things. So yeah, MTI. What I like. Somebody asked about the MTI a moment ago. So you look at something like Hood. We went from sort of really kind of poor, a lot of red, to kind of starting to get nice and yellow, which is where I would sort of go in and say, that's starting to look like an interesting income trade in that name. That's a little bit slightly more on the speculative side of things, but I do love the name. And then we start getting these nice greens where you can, probably get a little bit more involved. Let's take a look at Amazon. Probably looks not as good, right? Amazon just kind of, it's a little bit more incomey. So when I see yellow, when I see blood red, I'm careful. I'm starting to hedge things a little bit more, right? And we've done a little bit of those in the service as well. But right now, I'm not like, I love Amazon, but I want to see just a little bit more stability in that name. Uber, I've been really, really liking. We're sort of building a turbo on that. I want to see this kind of cycle back. Look at the yellows turning into greens. And that's a nice thing to see, right? That's a nice thing to see. Somebody's asking me for my email. So yeah, Albrecht, HALBRECHT @optionpit.com, @optionpit.com. So Christian, if you could put in the link for anyone who wants to get involved, and I really, really encourage you to get involved. You're going to get way more than you expect, and you're going to get how a pro really looks at these things, which is absolutely key with income trading. You really, really have to have that all-round sort of view of things that helps you to navigate these markets and these trades. NVIDIA, I really, really like. I've made no secret of that lately. I think AI is taking another leg up. I've been covering AI since like 2016, 2017. Consulted on a very large portfolio of AI names for industry 4.0, and I'm starting to see these nice yellow shoots here. Right after, remember how miserable NVIDIA was acting? Well, you kind of see just blood red, terrible, and then we're starting to see these positives here. So it's not to say that you're always going to pick the bottom. It's to say that with income trading, you really want to get involved when the coast is a little bit more clear. That's very different from catching a falling knife. You can try to catch a falling knife all day long, and when you get a 1,000-point S&P sell-off, you just ruined your account, right? People can figure out how to make money, but it's those few trades every year that destroy accounts, right? So that's really this. It's not really a big secret. It's like diet books. Do we need another 100 diet books this year? It's pretty simple: exercise, eat well, all that stuff. So when you come back to some of the fundamentals of trading and investing, you have to really just, get back to basics, which is avoid more bad situations, know how to react. We have a ripcord strategy that helps you to get out of positions that aren't going right, because you're not going to be right on everyone. Markets are going to market. They're going to do what they do. But I like to see this NVIDIA. We got a lot of yellows here. I do want to see it back above 130. I think the earnings are going to be great. And I'm building a position in that name. I think it's the picks and shovels king of this next leg of AI. So let's see here. I think we've run out of time, folks. I think you've got to get to Enzo. I hope you got that email. Yeah, you get trade alerts. You get updates all the time. You get me in the chat. Lots of unofficial trades that we put on because I'm a degenerate investor and trader, and I just can't help it. So we talk about all kinds of things. So get involved. It's fantastic. Christian, put it in there. There it is right there. So everybody have a terrific, terrific day. I hope everything goes awesome for you. Let's see if the market can get back up above. I'd like to see SPY 580, 582. I'm going to feel a little bit better about that. And for now, we'll see you in Turbo Income. Thank you, Goss, Chip, Sherry, Prinar, Enzo, Jose, Scotts. Let's turbocharge it. Just turbo it. I think I made a logo the other day that had like the Nike swoosh. Just turbo it. Kind of cool. I'm working on it. Okay, folks, have an awesome day. Safe trading.